You were spot
Yes.
on over the last 18 to 20 odd months
Right.
with your calls there. There is a
Right.
China reopening happening
Right.
while the
Right.
West is entering a recessionary phase.
Right. Right.
And the Indian export duties have been reversed.
Withdrawn. Yeah.
Yeah. So what about the fortunes for the metal companies or metal stocks?
So I think the sentiment today is turning a little positive. As I just said, stocks are actually reflecting that. But I would say that removal of the export duty thing, that 15% was there, has been seen as a positive news. But the point is this, that at this juncture, the global economy is actually slowing. And if you look at the global export prices, and I would say prices of steel prices of, I'm talking about steel. So if you look at steel price, HRC from Japan, Korea, etc., Vietnam, have actually come down quite a bit. So Chinese prices are also much lesser. I would say it's actually 50% lesser from last year. If
So
you do a
China's opening up.
comparison, yeah, I'm coming to that. So
Okay,
I'm
sorry.
saying, so basically, if you look at the current scenario, the HRC price for India is hovering around 740, 150 dollars per ton, and I think the global prices are much lower, at least 20 to 30% in discount. So I think the removal of export duty is basically ineffective because our costs, our prices are higher. If you look at it, the China opening news is there. But simultaneously, what we find is also that China has also been trying to impose anti-dumping duties on Japanese imports, or dumping by China of cheaper steel into China. So imagine a large country which is actually producing more than 50% of world production also has to impose a sort of import duty, anti-dumping tariff. So essentially, the kind of glut that is there is very high. So I would say that as far as opening is concerned, two three things one has to really look at. One is what happens to the housing sector in China. We know that the governments have actually given some sort of a liquidity stimulus, etc., to stem the fall. But I don't think it's going to translate into a rebound, because I would say Chinese housing sector constitute roughly about 20-25% of total consumption out there. So that's not really changing. Secondly, I would say that China's opening also needs to be tested, because a lot of people have not undergone second dose, or the booster dose. So as you open up, you might actually see the spread of COVID, and we don't know how they will respond. Thirdly, I would say uh, China at a macro level has a very high dependency as far as exports are concerned. Roughly about 30% of GDP or more is coming from exports, and they are dependent on the US and Europe. So if you look at that, basically that traction is not going to be there. So I think this hope thing with respect to China in terms of better growth, etc., maybe it will be better with opening up and all, but it's not going to be a major sort of delta as far as the overall demand for steel is concerned. So I think it might stabilize as far as the decline is concerned, but I don't think it's going to be a major rebound as much as it has been priced in metal stocks.